A 501c group is a nonprofit, tax-exempt interest group that can engage in varying levels of political activity. They are not subject to FEC disclosure rules. What does that mean? It means that they don't make a profit, they do not pay taxes, and they can participate however they want politically. They can do this either by endorsing candidates or donating a large sum of money, as long as their purpose is not to be politically active. They also do not have to say who gave them the money. Where does it get its name? From the section of the Internal Revenue Code named 501c. This states that there are a certain number of organizations that do not have to file a tax return and that are tax exempt. What are some examples? Two Republican examples are the National Rifle Association and the U.S. Chamber of Commerce. A Democratic example is the Planned Parenthood Action Fund. There are many different types of 501c groups. They range from 501c2 through 501c29, but however, we are going to focus on the first 6. 501c2 groups are exempt from federal income tax corporations as defined in IRC 7701A3. Corporations include associations organized for the exclusive purpose of holding title to property, collecting income therefrom, and turning over the entire amount thereof, less expenses, to an organization which itself is exempt under IRC 501A. What does this mean? It means that they do not pay taxes. They include corporations and associations that were formed to hold title to property and collect money from that property, and the money collected that is left after the bills are paid is given to another organization that is tax exempt. What are some examples? A company that manages and protects all real estates and other assets is just one example of a 501c2 group. A Section 501c3 organization must not be organized or operated for the benefit of private interests, such as the creator or the creator's family, shareholders of the organization, other designated individuals, or persons controlled directly or indirectly by such private interest. The net earnings of a Section 501c3 organization may inure to the benefit of any private shareholder or individual. A private shareholder or individual is a person having a personal and private interest in the activities of the organization. They cannot influence or attempt to influence legislation or participate in political campaigns. What does this mean? Well, the purposes of organizations are mostly religious, scientific, or charitable. They cannot benefit anyone involved in the group. There are no political participation except for voter registration. They can accept tax-deductible donations. Some examples: benevolence organizations or charity groups, the Animal Welfare Agency, or educational organizations such as the American Federation of Teachers or the College Board. They can fall into 3 categories: public charities, private foundations, or private operating foundations. Private foundations are non-operating with no active programs, and their money comes all or mostly from donors. Private operating foundations maintain active programs similar to charities, but have closed governance similar to foundations. According to the IRS, a 501c4 group is a civic league or organization not organized for profit, but operated exclusively for the promotion of social welfare and local associations of employees, the membership of which is limited to the employees of designated persons in a particular municipality, and the net earnings of which are devoted exclusively for the promotion of social welfare. What does this mean? It means that they are social welfare organizations who can engage in political activities as long as those activities aren't their primary focus. What are some examples? The homeowners associations, volunteer fire companies, and National Rifle Association. The IRS says a 501c5 group provides for the exemption from federal income tax of labor, agricultural, or horticultural organizations. What does this mean? It means they are nonprofit, they are tax exempt, and they include labor and agricultural groups. What are some examples? The American Federation of Government Employees and the United Mine Workers Organization are 2 examples of 501c5 groups. Lastly, a 501c6 group is similar to those of 501c4 and 501c5, except for the types of groups included. What does this mean? It means that they are nonprofit, they are tax exempt, and they include business leagues, chambers of commerce, real estate boards, and boards of trade. What are some examples? The American Medical Association and the National Hockey League. Is 527 corporations. A 527 corporation is a U.S. tax-exempt organization that is organized under Section 527 of the U.S. Internal Revenue Code. They represent a variety of positions on a variety of issues, but they all have one thing in common: they influence how you look at the candidates. Their activities may not instruct you to vote for or against a specific candidate, but often they will try to shape your opinion of a political candidate or a party in the context of a specific issue. Such organizations can raise unlimited funds from individuals, corporations, or labor unions, but they must register with the IRS and disclose their contributions and expenditures. Why do we have them? We have 527 corporations to influence the selection, nomination, election, appointment, or defeat of candidates to federal, state, or local office. Exempt from federal income tax, all such political organizations must electronically file notice of Section 527 status, Form 8871, with the IRS, with the exception of committees required to file with the FEC, state or local candidate or party committees, or any organization that anticipates annual gross receipts of less than $25,000. What does this really mean? It means that they can raise unprecedented amounts of money from individuals, corporations, or labor unions. However, they must register with the IRS and disclose their contributions and expenditures. They can be exempt from the federal income tax if they electronically notify the IRS that they are of Section 527 status, unless they are committees required to file with the FEC, state or local candidate or party committees, or organizations that anticipate annual gross receipts of less than $25,000. The term 527 refers to the political organizations as identified in their tax filings with the Internal Revenue Service. The number 527 refers to the section of the tax code that governs such entities. These groups are typically parties, candidates, committees, or associations organized for the purpose of influencing an issue, policy, or appointment or election, be it federal, state, or local. Campaign finance reform. Campaign finance reform is the political effort in the United States to change the involvement of money in politics, primarily in political campaigns. The Federal Election Campaign Act, or FECA, of 1972 required candidates to disclose sources of campaign contributions and campaign expenditures. However, it was amended in 1974 with the introduction of statutory limits on contributions and the creation of the Federal Election Commission, or FEC. They attempted to restrict the influence of wealthy individuals by limiting individual donations to $1,000 and donations by political action committees, or PACs, to $5,000. These specific election donations are known as hard money. Hard money is defined as funding by a government or organization that is repetitive rather than a one-time grant. The most recent major federal law on campaign finance was the Bipartisan Campaign Reform Act, or BCRA, of 2002. It is also known as the McCain and Feingold. It revised some of the legal limits on expenditures set forth in 1974 and prohibited unregulated contributions, or commonly called soft money, given to national political parties. Soft money refers to funds spent by independent organizations that do not specifically advocate the election or defeat of candidates. The famous court case involving campaign finance reform was Citizens United versus the Federal Election Commission. This took place in January of 2010. The U.S. Supreme Court ruled that corporations and unions cannot constitutionally be prohibited from promoting the election of one candidate over another. Corporate funding of independent political broadcasts and candidate elections cannot be limited because it violates the right of these entities to free speech. The prohibition of all independent expenditures by corporations and unions violated the First Amendment's protection of free speech.